Hey, so the numbers are in. October 2023, we're going to look at how October 2023 finished out, compare that to October 2022, and kind of see what the trends are doing. Excuse me, as you all know, we do a weekly market report, and our purpose for the weekly market report is to be able to see in as real time as possible what's happening in the market. For example, and the reason for that is so that we can make strategic decisions if we're writing offers or if we're representing a seller on how to price the property and what to expect with regards to offers and so on and so forth. Because that gets us into the minutia, so we can tell what's going on in the market in that time frame. Now we do these monthly market reports so that we can see what the big picture looks like, so we don't miss the forest, because we're all the forest for the trees. We don't miss the forest for the trees. So we want to get that bird's eye view of what the market is trending towards, so we can kind of see if there's any patterns that are happening as well. The reason we use the 7-day market report for our decision-making process is kind of exemplified by the fact that it is now November 10th as I'm shooting this video, and I'm shooting the numbers for October, because it takes about, at least just in our multiple listing service, it takes a good 10 to 12 days for the final numbers to get tallied up and all the reports to be accurate. So there's a lag time. So what happened on October 1st is now being reported on November 10th, okay? And if you're looking at national media, quite often that can be even a longer lag time of 45 to 60 days. So we don't want to look at statistics and make decisions based on the past, but we do want to see what the trends are, okay? So that's what we're looking at. And these results that we're going to be going through are specific for the Northern Virginia area. Just to be very specific of what it is, we're looking at McLean, Great Falls, and Vienna. We have found that they're typically pretty representative of what's happening in general over Northern Virginia. Okay, so let's dive into the numbers. Let's see what's going on. So number of new listings for October of 2023 was down a little bit. It was actually down significantly from October 2022. So this is a very important factor, because what this is that is our supply. So our supply was down. So if our supply is down and our demand is still there, then we have higher demand than we have supply, and we end up with prices still continuing to appreciate, which is what we're seeing. Number of sales. We had 120 sales in October 2023. Now that's actually up over October 2022. So the interesting fact about that is, even though inventory was lower, we had more sales. So that just shows that buyer demand is actually there. Days on market. October 2022, it was 37 days on market. October 2023, it's 28 days on market. So keep in mind, when we're looking at the 2022 numbers, the interest rates had been going up now for, about 6 or 7 months, but they were just starting to get, they started in the 3s and they went up to the 4s and then went to the 5s and went up to the 6s. So in October, we were at the higher parts of those interest rates, and every increase at that point was still kind of a shock to the system. So the market had kind of started to settle into this lower area here, but you can see these days on market were high because buyers were really kind of freaking out about the interest rates going up. A lot of buyers back then were sitting back saying, we want to wait for interest rates to come down so that it's more affordable, so the prices, or wait for prices to come down. And we were explaining back then that the mechanics are not there for prices to come down. And so those buyers that sat on the market and waited, if they're, excuse me, if they're still sitting on the market waiting for prices to come down or for interest rates to come down, then they've missed about 6 to 7% appreciation, which means that their $500,000 house is now costing them $530,000. So that's just something to keep in mind. If you're still sitting on the sideline, the reason we do these statistics, the reason we do these market reports, is so that you can kind of see what are the mechanics, and is there a potential for a price drop to happen? Are there things that are happening that may indicate that coming? Or are we looking at a potentiality of prices continuing to go up or even flatten? Even if prices flatten, it's still a good time to consider getting in, because as soon as those rates come down, demand's going to shoot way up. All right, but what we're seeing, we're not seeing a flattening of prices, we're still seeing appreciation. It's not the 10, 15, 20% that it was during the heyday, but it's still 5 to 8% depending on the area. So months of inventory, this tells us, this is what we call the absorption rate. And it's basically agreed that anything under 6 months, 5 to 6 months, is considered a seller's market. Anything above 6 months is considered a buyer's market. That 5 to 6 month range is kind of a normal, healthy market. We are still below that. We're still at a 4, meaning that we're still in a seller's market, meaning that the demand is still higher than inventory, meaning that prices are still going to continue to appreciate, or at least they did for the month of October. Median sales price. So median sales price for October was 1.175 million. October of 2022 was 1.1 million. So it has continued to appreciate. Median sales price is the number that statisticians use and economists use to measure house values. But it can be a little bit misleading, and I know that I covered this each month, but just in case this is for those who this is their first month back. So the median house price or median sales price is different than the average sales price. Median sales price is basically calculated, it's by the price where half of the listed prices are higher and half are lower. So there's a reason why this number is picked, and that reason is because then it's not skewed by an extremely high number or an extremely low number like an average would be. If you had a cluster of homes that sold for $1 million, like 500 homes that sold for $1 million, and then you had one sell for 100 million, that's going to take that that average sales price and it's going to raise it up. Median sales price is not affected by the top and the bottom. It's the number that falls right in the middle. So how can that be misleading? Well, let's look at this. Month 1, and this is just an example, it's a small sampling. We have, I think, 10 properties here, 9 properties. Month 1, these were the sales prices: 3 million, 2.75, 1.65, 1.55, 350, 275, 225, 220. Okay, so the median sales price on month 1 is $500,000 because that's the number that falls right in the middle. There's 4 above and 4 below. So $500,000. Okay, that's the median sales price. Now you look at month 2, we have the same number of transactions, but we're looking at 4.25, 3.5, 3.25, 2.5, 400, 395, 385, 350, 315. Now, every one of these numbers is higher than these numbers, except for that median number. The one that falls right in the middle is 400,000. So if you're comparing statistically month 1 to month 2, month 1 median house price was 500,000, month 2 was 400,000. Based on this number and what would be reported in the media and what would be reported, throughout everybody if they didn't understand how these numbers worked, the housing market declined 20%. So what that indicates to buyers is, number 1, it's crashing, so everybody gets scared and everybody pulls back. But number 2, it now indicates, theoretically, that a $500,000 house is worth $400,000 because you're getting a deal. So median sales price has nothing to do with home values. This is very important to understand. It's the number that fell right in the middle. Okay, so let's say that that this is also something that can be affected. Let's say the interest rates go up. So if a group of buyers was looking at properties between $600,000 and $800,000, and then interest rates went up, so their buying power went down to, let's say, $400,000 to $600,000. Well, their median sales price is going to go down because that's where their buying power was. But that same group of people bought a house as they would have bought here, but they had to buy at a lower price. It doesn't mean that they bought a $600,000 house for $400,000. That just means that they had to go buy a $400,000 house instead. So there's 2 scenarios there where a median sales price can be misleading and not be indicative of the actual home values. The way that you determine home value is you look at specific properties or similar properties, and you see what those properties were worth last month and what they're worth this month, or what they were worth last year, what they're worth this year. And it's very specific. It can be neighborhood specific. Something could happen in a neighborhood where house prices in a neighborhood come down, and those values are actually dropping because of some circumstance that affects only that neighborhood. So you can't make a generalized statement of assumption that median sales price is giving you actual values, okay? And that goes in the other direction as well. So for example, the median sales price here was 1.175, median sales price here was 1.1. Okay, that doesn't mean that that $1.1 million house is now worth 1.175. It's actually probably more worth like maybe even like 1.2 because of the appreciation that's happened. So it's individual properties, not overall stats. And I apologize for going on and on about that, but it's very important, especially in this confusing time right now where everybody's kind of nervous about what's going on with interest rates and should they buy, should they wait. The simple fact is property values are still going up. We're seeing it happen. And it's going to take a whole lot of inventory to change that, and we just don't have the inventory coming on the market. All right, so that's median sales price. Last statistic we're going to look at is the list to sales price ratio. So what this is it's the listing price compared to what it sold at. You know, is it high, is it low? And you can see in October of 2022, it was selling right at 99.5%. So and again, at that time, you'll see that there was a lot of lower list to sales price ratios here because sellers were still adapting to the fact that buyer demand was dropping. They were still acting as if it was early 2022 when they could put a property on the market, they could stretch the value, they would still get above asking. In this time frame here, they hadn't really adapted to it and hadn't really figured out what the new sales prices needed to be for what the buyers were able to pay and so on and so forth. So prices were coming down a little bit. Didn't mean values were coming down. It just meant that prices were coming down until they hit that market value. And then you'll notice that probably around February, they started figuring out that was the last month where they were like, okay, just asking too much. Then when we got into the spring, everything started going for above 100%. September did have a little bit of a dip, 99.5%. We did have a slowdown in September, and I've gone through that in our weekly market report, showing that we were in a little bit of a buyer's market. So buyers weren't overpaying, or not overpaying. They weren't in as much competition, so they weren't having to pay above asking price, and then some sellers were still overpricing and having to come down. So it averaged out to about 99.5%. And then October, it was back up over 100%. So this basically shows us that prices are not coming down and the demand is still there to support asking price properties if they're priced appropriately. Okay. All right. So, and then I've gone over this before, but I just wanted to look through it again just real quick. There are rumors of a recession coming. I think we've been in a recession for a while now, but I'm not an economist, so that's just my opinion. But we can show how interest rates, this line is interest rates. This is what interest rates have done over time, and this is what prices have done over time. So even when interest rates were at a peak, prices were still coming up. You can see that prices have almost always gradually come up, except for this range here from 2007 until about 2010-11, when we had the great financial crisis. So this brings me to a very good point. And I'm going to try to include this graphic on the next market report. But there was a graphic that I saw that over the last 81 years, 73 years has had at the end of the year, so year over year, positive appreciation. So 73 out of 81 years has had positive appreciation. 1 year was flat. Now, positive appreciation could be 0.5%, but it was still positive. It was a positive movement in prices. 1 year was flat, and the remaining, I think it was 7 years, were negative. Okay, so out of 81 years, only 7 years were negative. 5 of those 7 years were right here during the great financial crisis. That great financial crisis happened because of the real estate market, because of predatory lending, so on and so forth. So the real estate market actually caused this crash. The other little dip that happened was here in the early 90s, right here. So the point of that is that if you're hedging your bets against the market dropping, especially I've got some buyers that potential clients that are sitting on the sidelines, they think that prices are going to drop 10, 20, 30%. So if you're hedging your bets that prices are going to drop, history is not on your side with this. So make sure that you're thinking numerically, you're thinking logically, and you're thinking based on values. Nobody knows what's going to happen. I'm not saying 100% certain it's not going to drop, but I am saying history is not in favor of a price drop, or at least one significant enough to make up for appreciation that happens while you're waiting. The last thing I wanted to highlight here, excuse me, is these purple lines are purple marks. Those are recessions that occurred. There may be others, but when I Googled recessions, these are the timelines that I found, and you can see even in those recessions, prices still went up, except for a 7 to 10, and that was during the Great Financial Crisis. So what does this mean? Okay, so let's get over here and let's look at, I've got a fantastic little flow chart. I love flow charts, so I like going through this. And bear with me here because I did not change this. So we're going to do this real quick live. So October 2023 versus October 2022. Market activity. Well, market activity, let's see. What was market activity? Was it up or down? Y'all bear with me as we go through this. Market activity, number of sales were up. Okay, 120 versus 112. So market activity was up. If you look at October here versus October here, it's pretty close to the same, but overall market activity was up. So bear with me. So market activity was up. What were the months of inventory? It was 4 months. So if it's under 5 to 6 months, it's a seller's market, which means that we're going to move into increased appreciation. So based on these stats and this flow chart of what we're looking at, we should expect next month to do the same, still increase in appreciation. Now, is it going to appreciate at 5 to 10%? We don't know. We don't know what that number is going to look like, but there's no reason for us to expect that there will be a price drop. There will be activity drops because of the holidays, but prices should remain strong. All right, if you have any questions, please feel free to let us know. Please make sure you like and subscribe, and we will see you on next week's video. Or I'm sorry, next month's market report. Have a great day.